So, welcome back to another episode. Um, Now, obviously, we finished the previous week. We didn't trade Friday, although looking at Friday's price action, we did miss an opportunity at the lows here, which I was just taking a look at. Fits the model and would have yielded an opportunity to end the week. But needless to say, not important, but it's always good to recap and evaluate the week and see if there were any opportunities that was missed. There was the moment we traded below the previous day's low, Q1, but we failed to do that. On ES and NQ, we had low time frame SMT here, and then obviously price repriced higher. So opportunity there, but now we're heading into the new week. So key things to note. Heading into next week, as we can see, Monday was a US bank holiday, so no trading. And pretty much all week, there's no US dollar news. So this, to me, represents a low probability week. That being said, we're still going to trade it. Now, naturally, I would prefer to trade on days that have high impact news. But for the purpose of certainly next week, and we'll evaluate moving forward, we're going to concentrate specifically on Tuesday, Wednesday, Thursday, possibly Friday, but primarily Tuesday, Wednesday, Thursday. Tuesday, Wednesday, Thursday. So we're going to analyze in this session to Tuesday, and we're going to see if it represents high probability conditions. So we've seen the economic calendar. We know that it's going to represent low probability conditions potentially, or certainly what it implies is that there are no volatility injections in the week, which are going to essentially be mandated by the economic calendar. But that doesn't mean that there won't be volatility injected into the markets. It just means that if it does occur, we don't know when it's going to occur. So we need to be prepared for what may or may not happen. So if we look at this, we're just gonna venture back out to the higher time frame, and what we're gonna do is clear our charts. Okay. So we're gonna clear the charts, and I'm just gonna drop down to the hourly because I find it's much easier. We're going to fast forward to Tuesday, just before the New York session. Okay, so that's Sunday. Next day open. Let's do that. What time are we? It's Monday. Okay, so that's our true week open there. Go to next session. Okay. Where are we? Okay, Tuesday 2 o'clock. Well, let's just go from there for now. So as usual, we're going to evaluate sort of a top down. I'm going to start on the 4 hour just because I get a better visual on certain things. I just never understand why the colours are so weird, but nonetheless, where's the beginning of the year? It's there. So it's safe to say that we're in Q3 of the monthly cycle. Okay, so let's take some key levels. And we're just going to transpose those onto the other charts to help build. So as we can see, this is where I was perceiving potential opportunity. But nonetheless, let's just concentrate right now on the key liquidity pools. So I was contemplating changing this colour to sort of a lighter one, and actually having it darker the more sort of specific price, but leave it as is for now. Okay, just have a quick sip of my coffee. Okay. So I do believe that this could be targeted down here. I'm just going to make a reference for this whilst I'm here. Well, you know, I'll do it on the other time frame. So that's the range. So I'm just going to go back out to the daily. So what can we see? We can see clearly that bearish fair value gaps are supporting price lower. That we can certainly see. So I'm just going to mark this one up here, and actually we've got a BPR in here which I will mark up as well. I just want to interesting. Okay. Oh yeah, because that's a low time frame. Okay. Where are we? Okay. So we've got the Sibi daily there. Just want to make sure that that's superimposed. Yeah. Okay. I'm going to take that, pair that up. And yes, I will mark up the BPR in a second. There's probably a very small fair value gap in here, which there is. So we will mark that up. Okay. And okay, like so. We can see a fair value gap in here, so we know this is likely the range. I'm going to take this. Like so. So I believe that this SMT is likely going to be retargeted? Yes, I do. More so because we can see how price has respected the daily SIBI. So we could be seeing an internal to external range liquidity move there. There's not really too much more I want to annotate on the daily time frame, or that's really necessary. I think the 4 hour will probably give us further insight. So just clean some stuff up. Okay. So price did overshoot the SIBI here. respected it on the ES, and we have the breakaway up here. I do recall I was going to mark something else up, which I'd forgot. So we'll do it now. Okay. So a daily BPR. So if that is purged and price closes above there, it's safe to assume we're going to be seeking higher prices. Okay. Just going to okay, so BPR, which pretty much, no, that's better. There we go. Okay, and as we can see, there's no BPR here. There's no imbalances above the marketplace, so that really is telling me a story that YM wants to continue lower. Okay, so going to the H4 time frame. What we want to do now is pick out Monday's price action. First off, let's get our highlighter tool from Monday, and Monday starts there. So do we have a clean low? The answer to that question is no. Okay, so we've got the high. So I'm just going to mark off the highs just as reference, and then we can plot the previous day's highs here. And ultimate here. Now, probably the most significant piece is the true week open. That's an important price level for us to annotate. So we'll do that now. Looking relatively similar on all of them. Okay, so now we've got a level of context. I'm not particularly, well, right now I'm not looking for longs. I want to see shorts. And we've seen a level of support in this area, which I will just mark up. Let's just do it there for now. Okay, certainly for ES. Okay. So again, because we know that this week is low probability, This does not mean just because I'm marking up today that, oh, there's a trade. We need to discern whether we think that we're in high probability conditions. Just as a general look at things, I think high probability shorts is what I would want to be targeting, which would mean I would need to see a run above the true week open and the previous day's highs. What I like in terms of high probability conditions is that the previous day's highs are located in relatively close proximity to the true week open, and they are also overlapping in a high time frame PD array. That for me is creates this high probability narrative should price decide to trade up to that key level. Okay, so that's something that I'm monitoring, and we can see that order flow has been bearish, but we'll get into that in a second. So we've got a H4 liquidity pool here, which is the Q5 low. So we can classify this now as an old low, H4. So that's a key inflection point. Okay. So breakaway gap, you know, so let's analyze the not the 17th, what am I doing, Tuesday the 18th. So IOF and ISS. So this is currently to the downside. And we can see the primary move occurred here, which was supported by a high time frame cracking correlation, which not so important. Right, okay. So this is currently to the downside following the high time frame displacement, which was initiated by the high time frame SST. Oh. At the highs. Okay. At the highs. Right. Which, as we can see, formed inside a high time frame PD array. Wikipedia array. Okay. Furthermore, I have noted how price is manipulating the highs whilst displacing through the lows. Bearish fair value gaps being repriced and rebalanced, or being left unfilled, with the market showing a willingness to reprice lower. Okay. ERL, IRL. Okay. As noted on the daily TF, the market traded up into internal range liquidity in the form of the CB daily. Therefore, my immediate attention turns to external range liquidity in the form of the old low. However, we need to caveat this. I would need to see a high time frame cracking correlation at the highs to initiate initiate the move down to external range liquidity. Okay, so that's ultimately what I want to see from that perspective. Okay, so it's not set in stone. So a bit of coffee. Not set in stone. We need to see the high time frame cracking correlation. Okay, so TOs. This is where now we get into the specifics of determining whether we're in high probability conditions or not. So currently, all members of the IFT are below their respective true week open. This represents potentially, or the potential, for high probability shorts should this be paired with a high time frame cracking correlation at the highs. Okay. So high probability conditions identified. SPs, I have noted clean and clear swing points forming the previous day's highs However, we do not have the same for the previous day's lows to support any high probability longs, whilst price currently resides below the true week open. Okay, so I'm not looking for longs. Very clear in terms of our one-sidedness approach to the market. I'm not looking for longs, looking for shorts. If shorts don't materialize, if price runs to a high time frame liquidity pool or what have you, then so be it. Okay, but I'm not looking for longs currently. That to me represents low probability conditions. Okay. And it appears that because it was the bank holiday, we had shortened trading conditions. So today may not represent anything. It may actually be Wednesday, it may be Thursday, but we're going to nonetheless step through and see what the market's going to present. So I am going to I want to just annotate this, just because for NQ this could be key. Okay, right. We can drop down to the hourly now. So remember, institutional order flow for me is determined primarily on the 4 hour. I will refer to the daily if I think that the daily is providing more clarity than the 4 hour. Okay. Okay. So onto the hourly. I'm now looking for key hourly liquidity pools. What we're going to do is run time on to next session. It should 7 o'clock. There we go. Okay, so as we can see, the market has presented hold on, I need to daily, weekly, monthly. Sort of convinced that that'd be grey. That would be green. So 7th of January. Sunday the that no. Okay. So we've got the true month open annotated. I'm going to go back to the hourly. So already for me, we've represented low probability conditions now with the market displacing lower. The only thing to potentially reference as a you know is the partial SMT. There. And ideally want that to there we go. That'll do. So we've got that. And I'm just purely no, that is not correct. It's not partial SMT. It's that. Apologies. I'm doing okay. Q2, Q3. So I'm just going to mark this off. This doesn't mean it's set in stone. I'm just for reference, so I can see that potentially something could occur here if it's accompanied with other factors. So we're just going to mark that up. It's not something that I'm primarily looking at, but it's something that could potentially dictate as well the likely direction of the near-term order flow. Certainly the relatively equal highs up here could well be focused upon. So we need to bear that in mind, and this could well be setting during London the low of the day, and that could in essence become the previous day's low for tomorrow, and then become ultimately a swing point and so on. So what I want to do mark that off as SSL. Okay. Want to do the same thing here, and want to do the same thing here as well. Okay. What do we have above price? We've got this fair value gap here. Now again, note we are below the true day open. We have what's there? Okay. H1, and we ultimately have another one above the marketplace, which would be classified within a discount market of this hourly range. Okay. There's no reason why this couldn't potentially continue lower, but for the purpose of where we're currently at in price, this is what we've got to work from. Now remember, the volatility of today is going to be created by equities open. So we're just going to acknowledge two things. Where the news embargo would ultimately occur, which is there, and we also want where the market volatility would occur from equities open. So those 2 points in time, we want those referenced. Okay, so back to the hourly. The market has certainly display slower. Okay. Okay, so we've got the London low. This does have a well, you can class this as a London high. And primarily because NQ as well has that, we will utilize that as a near term low time frame draw. We'll put that there as well. So let's have a look. What was that? So what we've got, that is 36, 36, 5. Okay. All right. So that's what we're working with. Okay. Okay. So potential, if price was to run below the SSL London, that could, and then trade back up and close, that in itself could result in a potential trade idea. Because we're below the true month open, low time frame SSMT, to validate the high time frame SSMT MC. Okay, so that's a possibility. It's not something that I'm fundamentally looking for, but if we're going to long, that is a potential model. High probability to trade model plus. So let's go to the M5 time frame. Sorry, the M15, and we want to sort of work our way to equities open. Okay, to see what price is ultimately doing and consolidating. We want to see engineered liquidity, which is good at the lows. We want to see that engineered liquidity and price to potentially come and violate that, taking out H1 liquidity pool. That's important. So let's see, and we're just gonna do that. One second. Full screen. I like it. Okay, let's go. So the time currently should be like 7. Yeah, 7 o'clock. Why is that? Not too quick. Okay, so if it trades up into looking at YM, appears to be really engineering that liquidity. As I said, the news embargo, but we don't have any news, so we're not expecting massive volatility at that 8:30 candle. Still possible, but we're not expecting it. But the 9:30 candle, look at YM trading close to that SSL London. NQ indicating wants to seek higher prices. Approaching that 9:30 candle. Okay. So it looks to me they're all very likely to trade below their SSL and continue lower, maybe even targeting that high time frame liquidity pool at the lows. So what we're going to do, YM, let's just go down to the 5 minute. Well, I'm just marking this as a, because we have had the rejection, no close underneath. That also validates that. We'll just leave that for now, and this obviously. Now, as you can see, that there. Do we have a sort of a universal purge? I don't have one, so let's just make that this color. Okay, copy that. So NQ. Remember that most of the volume is the bodies. And YM. So obviously close that. So back to the M5. We have the inversion here. Price has not traded above it yet, so that's still a premium. So we'll classify that as the CB M5. Although, let's just pan out a second. We have got an M15 one in this order block here, but the M5 is in rather closer proximity, so we will, and we're trying to validate the low time frame SMT. So within NQ we have this BPR. Okay, which the M5 is closed above. So that's the first sort of sign of the market tipping its hand. Okay. Going to drop this down to the 1 minute. Need to see more information. We are 10 minutes after equities open. Want to see if ES makes any commitment to want to trade higher, which currently it's not. YM continuing lower, respecting the 5-minute CB. Currently ES is respecting its 5-minute CB. It's rebalanced it. So we actually want to see ES trade through if this is going to seek higher prices, and currently that's not the case. So the market's currently consolidating. I'm just going to stop this, and we're just going to go to the M5. Oh. Actually want the M1 again. The fact that price has gone back into the civvy on ES does lead me to believe that we could be trading through it, but we'll see. It's not a... I mean, YM is leaving relative equal lows, which suggests to me they're going to be purged. So YM is likely to trade lower. I'd be very surprised if it just sort of left price action like that. NQ could be seeking liquidity above the market, above the BSL London, before continuing lower. So right now we're just in a very low probability position. And this is not something that I would look to engage. There's no value in participating in the market here. It's relatively low probability. Our preference was shorts. That wasn't presented. We noted the high time frame S70 at the lows relative to the monthly cycle, and we want to see if that would be confirmed and validated by a low time frame S70. Hasn't been validated. NQ validated its structure. YM and ES have not. Therefore, there's no trade. It's as simple as that. So now we're going to just change this up to 5 minutes. And we're only really interested in the AM session. Yes, the PM session can provide an opportunity, but let's see. Here comes NQ repricing lower as well. Extremely low probability. Past 11 o'clock now. So not looking highly probable. And partly because of London's early move, it's created this sort of choppy price action. Let's just... That was initial SSL. I mean, now we've sort of traded all the way down here. A lot of chop. We've got this here. We can move that for now. Okay. SM15. Okay. Which will overlap with the M5 now. So that's now a key PD array. But again, we're just not seeing anything worth... I mean, look at the engineered liquidity at the lows on YM. So we're now coming up to 12, and that will bring an end to that session. So let's pause it here. So what was the takeaway? The takeaway was that through the high time frame analysis, I formulated my one-sidedness opinion that I wanted to see shorts. That was the high probable setup. Now it just so happens at the lows that the market formed another high time frame SSMT relative to the monthly cycle, but our preference is always the weekly. The weekly cycle SSMT was not there. We wanted to see if the monthly SSMT was validated by a low time frame SSMT relative to the daily cycle. That did not occur. The structure occurred on YM, but it also left relative relatively equal lows, and it was never validated. Sorry, the structure occurred on NQ, but it was never validated on ES and YM. Therefore, that's no trade. And ultimately, what we saw was price just chop and ultimately reprice lower, purging the lows. So therefore, now we are in, confirmed no trade territory. So our overall analysis of saying that anything from the lows was low probability was correct. We wanted to see price move to the highs, which did not occur. So we're going to head into tomorrow now to see if, once we reanalyze the market, whether we have better market conditions to frame potential high probability environments to formulate a high probability trade. So hopefully within this episode, again, you have taken away how I have framed the market to determine what constitutes high probability trade conditions versus what constitutes low. And when we enter low probability conditions, what we are expecting to see from the market. We don't want to rush in and try and formulate a trade unnecessarily. I formulated the trade based on sound logic, which did not materialize in the end at the lows. But fundamentally, we knew what we were looking for. It didn't present itself, so we moved back to the sidelines and we wait for further information. Remember, we are looking for essentially a one-shot, one-kill. Maybe if we can get 2 opportunities in the week, even better. But we want to take a one-shot, one-kill, and we want to really try and capitalize on that opportunity. So, with that being said, I'm going to leave that here. I'm going to take a break, and I'm going to come back a bit later on. And we're going to move into Wednesday the 19th and see if the market presents some favorable conditions for us to frame a trade. So I hope you found that enjoyable. Hopefully you took away the keynotes from that session, and I will catch you guys in the next one.